Right, Munyumba, the budget was presented last week, and for now, it will go through the process of debate in Parliament. But back on the markets, just how did this week open on the local scene? Did the budget presented last week offer any reprieve to the kwacha? The inflation print last week was also clouded by the budget. What do you say about the September print of 15.7%?
I think first thing that we can take into notice is that the kwacha is still moving at a very steady pace of about 1 to 2 ngwe per day. Now that frightens me more than sudden jumps in the market, because sudden jumps in the market can always be traded back. Those are opportunistic trades that happen. My concern is always when you see those 1, 2 ngwe movements or 5 ngwe movements that happen steadily, and we're still on that track. So we're seeing this movement of the kwacha still having a steady move down. So there is supposed to be some dollar flow that always comes in the third quarter. My problem is also going to be if this is the pace because this is the pace that's going to be traded off for the final quarter spike that starts to happen, and it's going to pick up somewhere towards the end of end of October, going into November. That's when the manufacturers have to start paying their fees. So that, I think, is my worry. As for the inflation print, like I said, the first problem I have with the inflation print also is that at 15.75%, this is the base for the last quarter also, because you start to get contractions in the maize market. In other words, there's not much supply remaining on the maize market, and then you got midi meal prices going into December, which can easily start to pick up again. So the big concern for both of these is these are a base forming for a run. Seems okay, but if you're starting at 15 and starting at 20 for the currency, you're pretty much setting yourself up for quite an intense run.
Right, now Munyumba, our Minister of Finance this afternoon had that initial meeting with our bond holders. This is coming out of that consent application last week. But it seems Zambia is not the only one in this. Like countries like Chad have joined the desperate call for debt support, and Kenya is predicting that its debt run will hit a rate of 2 billion shillings a day by the next elections. There seems to be a fundamental flaw, Munyumba, in the development strategy for Africa that makes us susceptible to debt shocks. Especially that it actually has been revealed by the Minister of Finance that Zambia's total indebtedness is actually at $18.5 million. What do you think is the root cause, and how can we fix this?
It comes from an old quote I remember by the professional tennis player Arthur Ashe, who said, "Start where you are. Use what you have and do what you can." Africa needs a strong lesson in humility. Now, of course, now that I've said that, people think because we're poor, we're humble. I can tell you right now, poverty does not mean humility, it just means you're poor. What it actually is supposed to be is that you have the humility to start at a point, know what your abilities are and use them, and not be afraid to start at that low point. That is the definition of humility that Africa needs. We are trying to accelerate development and accelerate growth because we are envious. If you go back to a statement that President Mwanawasa once had, he said, "We want to have hospitals just like you, so we're in a rush to develop." Now, whose dime did he do that on? He borrowed from China and borrowed from everyone else. Now, obviously, President Mwanawasa didn't open the floodgates like has been done recently. But the problem is the sentiment is still there, and it's across Africa. Borrow to grow because somebody else owes us. So we have to get rid of that sense of entitlement. Now, I can give you 2 countries very quickly who have actually proven the model of start where you are, and they grew into titan nations. One is Israel. Israel under Prime Minister Shimon Peres and under his leadership and under various leadership created a startup-friendly environment and accepted that they called themselves a startup nation. And they acted like a startup, built themselves from scratch. China is another example that acted like a startup nation and said, in 100 years' time, that was in 1950, we want to actually be a superpower. And what did they do? They grew their economy 500-fold, even with only a 2 times growth in their population, and they managed to expand to becoming the second largest economy. Just a quick number, Yoela. The size of the Chinese economy back in 1950 was $30 billion. Pretty much you were better off being a Zambian under colonization than to be a free Chinese man. That's how bad life in China was. Today, China has expanded to becoming the force that it is today because they grew themselves, they accepted the position they're in. Africa needs to eat humble pie and start to accept that if we have to build roads with molasses instead of tar, then that's what we're going to have to do. If we're going to have to build clay hospitals, if we're going to have to start working off our old herbal medicine for our healthcare system, that's what we need to do. We need to learn to start where we are, eat some humble pie, and stop trying to accelerate on other people's money, because this is It's a fundamental problem of Africans believing they're entitled to development by Western nations because they colonized you. Let it go and move on.
Yeah, Munyumba, if we have to start where we are now, Zambia is at 18.5 million negative billion dollars. So what do we do? I mean, and then of course, what do you think the Eurobond holders will say with that, consent application that we've thrown through? Yes or no?
I don't think so. Not without IMF support, not without a backing, and not without a growth plan. I'm not even sure they even have the sympathy for us because of how much they've warned us about this position. And I'm sorry, once people warn you, the sympathy levels just evaporate. And plus, they think a lot of this has got to do with the elections in terms of spending, and our budget didn't help. So that's the situation.
Yeah, but what do we do as a Zambia because we've got 18.5 million billion dollar debt?
What you do is you create a startup-friendly environment, and you start building your country. You see, the other thing with debt holders is that there's currently $15 trillion of negative yield debt out there in the world. So that means some people there are paying people to take money off their hands, and they're hungry for yield. But they don't trust Zambia because they don't see a growth plan in Zambia. Open up the markets and show them that you are planning on building a base domestically, and they'll be patient enough. And they can even start to talk about refinancing your debt. You need to sell the bondholders a new message. You can't pay your way out of this. You have to propose a better way of doing things, and you have to open up a startups market of local businesses who you can tell them that, look, in 10, 20 years' time, this is going to be our tax base. If you do that, you can renegotiate with bondholders in a much easier and less hostile fashion. But if you're going to go there and try and convince them that you're going to come up with 18 billion, or you're going to come up with the money somewhere down there, you're not going to. You're going to contract more debt, because right now in the budget, we're contracting another 36 billion kwacha already in foreign debt, just from this budget.
Yeah, right. But finally, on the global stage, we have the U.S. presidential debate commencing today, one of 3 debates. As you know, these get very exciting as we approach the elections. What sort of impact are we expecting on a global stage? Take us through what is happening in the market so far.
The markets are shaking right now a little bit because there is a bit of concern from the financial sector, a little bit about a Biden presidency, oddly enough. And the reason is this: they are worried that Joe Biden is going to introduce a very strong tax regime, especially supported by people like Bernie Sanders and even Alexandria Ocasio-Cortez, that kind of left-wing progressive group who are actually advocating for very strong wealth taxes and very strong tax regime. Joe Biden even put through a 35% back to on the capital gains tax. Those are the concerns that the markets are starting to have, that there could be a Biden presidency. So they are showing a little bit more confidence towards the President Trump. Now, the debate isn't going to do much to sway sentiment. I think everyone has pretty much decided which corner of things they are. The concern, obviously, the number which I keep watching when it comes to the election in America is voter enthusiasm. The voter enthusiasm numbers are going to tell me who's going to win, because this is the same mistake that Mitt Romney made with President Obama. President Obama looked like he was going to slide a little bit in 2012, but he had enthusiastic voters while Mitt Romney didn't. There's a big difference between favorability and voter enthusiasm. You will find that President Trump has actually got voters who like him. Joe Biden just has voters who hate President Trump. And unfortunately, that kind of cocktail of voters usually end up not going to the booth. And that's where I think the problem starts coming for Joe Biden. He's got an uphill battle in making voters, in trying to push voters in his direction. How that's affecting the market: the US dollar is getting very strong. It's picked up from 91 where it was low, picked up to 94. It's because people are now putting cash aside, and everyone keeps asking themselves the big billion-dollar question: why is 1/4 of Warren Buffett's Berkshire Hathaway portfolio in cash? What does he know that we don't know? So everyone is trying to stockpile cash. That's why gold is down and dollar is up, and stock markets are fluctuating in a very volatile fashion.
Right. Munyumba, thank you for coming through to S24's Money Watch. We hope to have you back soon.
Thank you very much, Owen.